Rochelle here. You may know me from other videos such as estate planning and tax planning, but today is my first foray into having a guest in this space, and we've got Chris Matlock, who's the founder and CEO of Avanir. Hi Chris.
Hello.
I thought this video could be titled "A Tax Accountant and an Insurance Salesman Walk into a Bar." I think both of us tend to work in a space that maybe isn't always that attractive at a party. People aren't quite sure about how to have a conversation with you. So tell me, how do you describe at a party to an everyday person what you actually do?
So we help clients insure their lives and their families and their businesses so that they can go and live their best life.
And what does that actually mean?
So look, it's about making sure that they've got protection in relation to life insurances and the different types of life insurances, so that they then know that if they have a pivotal health event, whatever it might be, a cancer, a heart attack or a bad accident, they know that they'll have cover there that they're confident will pay them a benefit which will look after their financial well-being.
Yeah.
We can't change what's happened from a health perspective, but we can certainly help with being able to go and get the money.
What tends to be the on-ramp circumstance in people's lives to then actually assess their insurance needs?
Yeah, really good question. So there's a number of triggers or sort of catalysts or life events that tend to make people think about this. So simple things like getting married. So now you've got a financial dependent. Having children, you've got even more dependents. Yeah. Things like getting your first mortgage or investing in a second property, an investment property perhaps, and so some more debt. Changes in occupation because they're all treated differently for life insurance and premiums. Yep. Lots of things, private school fees, just there are so many different triggers, but they tend to be some of the common reasons why clients contact us.
And so lots of people would think, don't I just have some life insurance in my super fund? Isn't that enough?
Yeah, again, really good question. So what we tend to find is it's good that clients in their industry funds and retail funds have some cover, but the research shows that typically it's nowhere near enough. Normally nowhere near enough because the covers tend to be default type covers. And they're minimum, and they're meant to be minimum covers. Right. So most clients don't then go forward and sort of do an insurance needs analysis and think, oh, actually I need more cover. So does that?
Yeah. So what then is the process to be assessed in what do I need? What? So if my husband and I came to you, what would be the process in assessing what our insurance needs are?
Yeah, absolutely. So what we do is we have a two-step process to get you to personal advice. Which will give you all those answers. But what we do to start is we do like a client profile or a client fact find. So we'll meet typically with both, and preferably both, the spouses and work through, what is it that they want to protect? What would they do if suddenly one of them was gone or one of them couldn't work for 2 or 3 years or maybe not ever work again? Or if they had a cancer, which they can hopefully beat. And then we'd work through what are their assets, what are their liabilities, what are their incomes, what's their cost of living, and that's pretty topical at the moment because it's pretty high for most families. And so we work through that process, and then once we understand all that information, as well as their super and any cover they have in their super, so we'll make sure we include that in a review, and then we'll do a needs analysis. So we will then work through all those numbers and bring them all together and come up with recommendations around how much of the different types of cover they should have.
And with cost of living in mind,
yes,
is it an expensive process?
Well, no, it's not. Most of our remuneration is paid via the commission for a policy when the client pays their first premium. Right. And we openly explain that to clients. So we only have a very small fee, which is an out-of-pocket for clients. But really, other than that, the client just needs to pay their premium once we actually get the cover. And what we do with with balancing the premium cost is we typically structure some covers inside of super,
Yeah.
and there can be tax deductions for the fund, as
Yes.
you
Yep.
well know. So we typically look at those options, either for self-managed super funds or other super funds, and then some of them need to be owned or are beneficially owned personally.
Yeah.
And as a tax accountant, you understand that all too well.
Yeah. Yeah.
So we tend to try and balance it.
Yeah. So thanks for your time, Chris, and we'll see you in our next video.